come to order. Senators Ernst, Gallego, and Slotkin will participate in the hearing pursuant to Rule 8C of the Rules of Procedure of the Committee of Homeland Security and Governmental Affairs. The ranking member and I approve of Senators Ernst, Gallego, Slotkin participating in today's hearing. I want to welcome and thank everybody for attending today's hearing titled Assessing the Damage Done by Obamacare. I want to especially thank the witnesses for the time and effort you put into coming here. I know we've got one of the witnesses took a red eye in. We ought to run a poll on the audience, see if you can identify who that person was. I'm not going to blow it. But again, thank you so much for your time and effort. Even before Obamacare was implemented, President Obama's repeated promise that if you like your doctor and health plan, you could keep them, was labeled PolitiFact's 2013 Lie of the Year. In a recent column, the Washington Post stated, quote, "The real problem is that the Affordable Care Act was never actually affordable." Today's witnesses will provide the gory details of exactly how unaffordable and damaging the signature legislation of President Obama and the Democrat Party has been. I've asked our three majority witnesses to each address a specific area where the damage has occurred. Our first witness, Joel White, will describe how further expansion of the third-party payer system under Obamacare has led to greater consolidation within all sectors of the healthcare industry, dramatically reducing competition and driving up costs. Our second witness, Taryn Bragdon, will describe the damage done to Medicaid and those who Medicaid was originally designed to help. Our third witness, Brian Blaze, will detail how the insurance market for individuals was dismantled and replaced by the Rube Goldberg Obamacare marketplace exchanges that, contrary to President Obama's promise of lowering family premiums by $2,500 a year, have caused premiums and deductibles to skyrocket. The witness for the minority, Shannon Verstegen, is a fellow Wisconsinite who I have a great deal of sympathy for. She is a victim of Obamacare's skyrocketing premiums and the limitations on small employers joining association plans, thereby forcing their employees onto the unaffordable exchanges. In Wisconsin, Obamacare exchange plans have increased 3.3 times the rate of inflation since 2013, whereas employer-sponsored insurance has risen at 1.6 times the rate. As a result, Ms. Verstegen's premium is more than $5,000 higher because of Obamacare. And if you compare it against inflation rate, that's about $7,500 higher than it probably should have been had we actually controlled costs with a health care plan. Today's hearing will highlight Obamacare's failure to meet its objectives. In March 2010, CBO scored, in the March 2010 CBO score used to pass Obamacare, it projected it would reduce deficits by $143 billion over 10 years and reduce the number of uninsured by 32 million by 2019. In 2013, the year before Obamacare implementation, 55 million Americans were enrolled in Medicaid. By 2019, that figure had increased by 17 million to 72 million, with Medicaid expansion accounting for 19 million of that total. That means enrollment in traditional Medicaid actually decreased by 2 million individuals over that time period. I know it's a lot of numbers. There's more to come. There were 12 million people enrolled in the individual market in 2013 and 14 million enrolled in Obamacare marketplace exchanges in 2019 for a net gain of 2 million. So you add that 2 million to the 17 million added to Medicaid, and the net reduction of uninsured due to the implementation of Obamacare was 19 million by 2019, only 59% of the 32 million originally projected by CBO. So first lesson there is kind of ignore CBO scores, they're not that accurate. Comparing 2025 to 2013, there are now 22 million more people enrolled in Medicaid and 12 million more enrolled on the individual exchanges, indicating a 34 million increase in enrollment. But wait, what is unknown, however, is how many illegal immigrants are included in the enrollment figures and how many phantom policies have been written for people who don't know they were enrolled and as a result make no claims. One estimate for 2023 puts the number of non-citizens enrolled in Medicaid alone at roughly 4.6 million. Addressing phantom policies on the exchanges, Brian Blaze will testify that in, quote, In 2025, improper enrollment in fully subsidized plans reached 6.4 million people, with associated improper federal spending exceeding $27 billion. So that's 11 million of the 34 million that should not be enrolled or maybe don't even exist. Obamacare is spread over multiple programs and agencies that have failed to adequately segregate its differentiated costs. So it's impossible to compare its actual impact on federal deficits versus CBO's March 2010 score. But I doubt many would argue that Obamacare actually reduced the deficit. We can, however, look at various spending components to get some sense of how it failed fiscally. Now, these two charts, and I'll just describe them. What we have is state-by-state comparison to 2013 premiums versus 2026. And you're seeing the percent increase. The red line shows the 39% increase in the CPI. So inflation went up 39%, but you can see on the individual exchanges, the average number of all those state increases was 169%, 4.3 times the rate of inflation. Compare that to employer-sponsored plans, which weren't affected as much by Obamacare, but there's also no reason that they should have increased at 1.9 times the rate of inflation. I mean, there's no reason for healthcare costs to be running this much higher than inflation, but again, you can see the exchanges are far worse than the inflation or the premium increases in the employer-sponsored plans. You can take those down. Federal spending on Medicaid has skyrocketed from $265 billion in fiscal year 2013 to $669 billion projected for fiscal year 2025. The cost of subsidies on the individual exchanges is projected to be $129 billion for fiscal year 2025, with the cost of the temporary pandemic-enhanced subsidies accounting for $20 billion of that total. The federal government takeover of the student loan program was supposed to help pay for Obamacare by reducing the deficit by $19 billion. Instead, there's been an additional $620 billion spent on debt cancellations and Biden administration's income-driven repayments. So instead of saving $19 billion, we spent $620 billion taking over student loans. Now, unfortunately, instead of acknowledging all the damage done by the faulty design of Obamacare and working in good faith with Republicans to repair it, Democrats simply want to spend hundreds of billions of dollars more in their attempt to continue to hide its failure. Extending the enhanced subsidies, the temporary subsidies Democrats designed to expire this year, not Republicans, Democrats set these to expire this year, would cost $350 billion over 10 years, plus an additional $60 billion in debt servicing costs. Lowering the health care costs and providing more American citizens with affordable insurance and covering individuals with pre-existing conditions are goals we all share. Unfortunately, Obamacare failed miserably at lowering costs and meeting enrollment goals. Accomplishing those goals could have been done by understanding and relying upon the benefits of consumerism and free market competition. By relying on those principles and returning to free choice for Americans, we can repair the damage done by Obamacare and transition to a health care system that actually works. With that, I'll turn it over to our ranking member, Senator Blumenthal.
Thank you. Let's be very clear why we're here. It is a Republican effort to destroy the Affordable Care Act. We are seeking to extend the health care tax credits past the end of the year. They make health care insurance affordable for millions of Americans who are right now going to the exchanges and trying to determine whether they can afford insurance. A commitment, an agreement, a guarantee that those tax credits will be extended will enable reopening the government. But that issue is not what brings us here today. It is a broader, relentless, calculated campaign to repeal the law that underlies those tax credits, to destroy the ACA and take away healthcare insurance from millions and millions of Americans who have come to rely on it. 15 years ago, Congress passed the Affordable Care Act, literally life-saving legislation that made healthcare accessible for millions of Americans and guaranteed coverage for millions more who suffered from the so-called pre-existing conditions that insurance companies use as a pretext to deny coverage. It made insurance available for millions of small business people, farmers, and others who were self-employed. It made health care accessible to children who otherwise would break bones or get sick and have no accessible health care. And it lowered the costs of insurance for millions. Ever since then, Republicans have been trying to destroy it. They sought to destroy it through more than 60 votes within a few years of its passage and failed every time, but they came close. I am haunted by a moment, one of the most moving and momentous moments in my time in the United States Senate, when a single vote prevented the repeal of the Affordable Care Act. It was John McCain's vote when he famously went to the well of the United States Senate as the last one of us to vote, and he gave that famous thumbs down with his still handicapped arm. That moment lives with us. And it showed the courage and strength of that great hero, a bipartisan hero. And the Affordable Care Act ought to have bipartisan support because the people who benefit from it don't get sick according to their partisan affiliation. People who are Republicans, Democrats, red states, blue states, we all need health care, and we all need health care insurance. Now, in the years since that moment, that famous moment when John McCain preserved the Affordable Care Act, it has soared in popularity. It turns out that Americans really like having access to affordable health care, and the ACA is more popular than ever. This hearing is part of an increasingly isolated and aberrant movement within the Republican Party itself to continue the effort to repeal affordable health care. Today, 24 million Americans have coverage through the ACA, and they are your neighbors and your friends, small businesses, farmers, families, people like Shana, who are here today. And she will tell you what it has meant to her. Just as others on a call I had this morning provided gripping accounts, real life stories for how it helped to save their lives. As a parent of 4 children, now a grandparent, I think often of the people who have approached me and told me they sleep better because they know that their children down the hall from them will have access to health care if they break a bone the next day in school, or if they come down with some life-threatening illness, or face a potentially lethal diagnosis, and they need treatment and care, and the emotional impact and physical trials are bad enough. But fortunately, they have coverage that means they're spared from financial ruin. Crushing medical debt is the #1 cause of bankruptcy still in this country today. So the ability to access healthcare has real-life consequences. But instead of hearing about those financial and medical and emotional impacts today, we are going to be hearing about spurious claims of fraud, no real plan to fix them. One of the real Americans who relies on the ACA from your state, Mr. Chairman, is here with us today, and I, again, thank her for being here. And we should let the American people know that the agenda is trying to repeal the ACA, because you will hear me say the ACA is not perfect. Healthcare costs in this country are way too high, no matter what kind of coverage you have. And we should work to bring down the costs of healthcare, whether it's pharmaceutical drugs or hospital charges. There are many things we can do to fix those problems, but forcing Americans who rely on the ACA to pay more, especially in this economy, will not help. And the American people said loud and clear on Tuesday that affordability is front and center on their minds. The affordability of rent and food and electricity and, yes, health care and health care coverage. Millions of Americans have no other option than the ACA, and they can obtain coverage only through the ACA. One of them is Sarah Cologne. She lives in Clearwater, Florida, and I want to tell you a little bit about her story. We're going to play a video.
You are running out of time. How much longer is this going to go?
Well, Mr. Chairman, I think...
Turn this off. Wrap this up then, okay?
No.
We have health insurance through the healthcare marketplace. We got it a couple of years ago when my husband was no longer eligible for health insurance through his employer due to needing to take a little bit of extra time to take care of Jordan, who's in a wheelchair and needs extra help. The marketplace was really the only option for us. For middle-class Americans who don't have private health insurance through their employer and don't qualify for Medicare or Medicaid, there is another option. So we did apply to the marketplace and we got health insurance. It's not cheap. The only thing that makes it even remotely possible is the tax credits that we get that help defray some of the cost of the insurance. We found out this month that our health insurance costs are going to skyrocket to about $3,700 a month without these tax credits, and that's just completely impossible for our family to afford. Our house flooded last year during Hurricane Helene. We had to evacuate Jordan in a canoe. We just got back in our house in March, and we just got through a tremendous amount of renovations, a huge expense, and we're not really in a position where we can move because our house is set up for Jordan. We have a handicap accessible bathroom, we have wide-edged doorways. His wheelchair can get around, and it wouldn't be able to in another place. Between home insurance and flood insurance and healthcare, we would be looking at paying about half of our income just toward insurance. And this is completely unrealistic for a middle-class American family. My husband and I are hard workers. My husband voted for President Trump. We just want to have affordable health care for our family. It's really scary to think about dropping health care when you have 2 young kids. The little things that happen, they get broken bones, sprains, things like that. And my husband and I want to have access to routine health care to make sure that we don't miss any health care issues as we get older in our 40s and 50s.
Thank you, Sarah.
Right now. The committee rules.
I'm sorry, Mr. Chairman. If you want to cut me off, you can.
I'm cutting you off right now.
But you cannot muzzle
I'm cutting you off right now.
a ranking member under these rules.
I'm cutting you off right now.
And you are stopping an opening statement just because you don't want to hear the facts. I think that's really regrettable.
You can continue your opening statement.
Fortunately, my Republican colleagues, I think, are willing to listen.
You can continue your opening statement, but let me make a...
So let me just conclude by saying
Or you are going to
that right
conclude.
now,
That's good to hear.
millions of Americans are wondering what is happening in Washington, D.C. And watching this hearing where the chairman is trying to muzzle a ranking member who's simply calling attention to the facts
Totally
surrounding
untrue.
the ACA, and the real-life stories of people like Sarah and Shayna Verstegen from Wisconsin indicates to me that we need to shine a light on what this effort is to repeal the ACA, and we need to stand strong in favor of affordable health insurance in the United States. Thank you to all of the people who have come forward, contacted me, who are here today to bear witness and be advocates in favor of affordable health care for people in the United States. I have more that I am going to say, but just let's be clear. Assessing the damage done by Obamacare, the name of this hearing, gives away the game plan. Republicans are refusing to extend enhanced tax credits because they hate the ACA more than they care about the pain that this move will inflict on families. Thank you.
So the ranking member has been incredibly disrespectful of these hearings. This is the fourth example of this. The rules allow for one witness from the minority unless they request an extra, and I've granted that request in the past. I had no idea that he was going to add another witness via video. After, I didn't really time it, but 8-9 minute opening statement, then adding another witness that he could have asked ahead of time. I probably would have granted the permission. He didn't do so. He probably had 3 or 4 more pages of his opening statement. He was going to filibuster for about 30 minutes. So that's what's happening here.
Well,
I wish I
had a half an hour more, but there's no way that I
Again, you are just being rude. As you've been rude as ranking member since I took over the chair. It's unfortunate. But I'd appreciate if you'd stop being rude, follow the norms of this committee, and if you want an extra witness, request it beforehand. And please, keep your opening statements to a reasonable length of time. I certainly extend that courtesy by keeping my comments reasonably short. I would like if the ranking member would do the same thing. It's unfortunate. But now we'll go ahead and swear in our witnesses if you all stand. Raise your right hand. Do you swear the testimony you are about to give to this subcommittee is the truth, the whole truth, and nothing but the truth, so help you God? So please be seated. Our first witness is Mr. Joel White. Mr. White is the president of the Council for Affordable Health Coverage. For over 2 decades, he has worked to advance numerous health care reforms and has led various issue campaigns to lower health care costs and promote health care transparency. He holds a Bachelor of Science from American University. Mr. White.
Thank you, Senators, and appreciate the opportunity to testify today. As you mentioned, I'm the president of the Council for Affordable Health Coverage. It's a broad-based alliance with a singular mission, which is bringing down the cost of health care for all Americans so they have access to affordable coverage. And I'm here to say that Obamacare isn't working for working Americans. It fails the affordability test, and it needs major surgery from Congress to get back on the right path. The law was passed in 2010 with exchange plans available in 2014. As a result of the ACA, there's far less competition and choice, and that is hurting consumers. Many more are covered now, but premiums and deductibles are through the roof. Obamacare put rocket fuel on medical inflation, and we're all paying the price. Rich subsidies have encouraged small businesses to drop more robust coverage, sending about 12 million people, or about half of all exchange enrollees, into the Obamacare market. There, they're paying deductibles that are twice as high, in some cases 3 times as high, higher premiums, and have less access to doctors and drugs. We are subsidizing inferior coverage through incentives created by this law. Why is this happening? A big reason is that Obamacare drove consolidation. It triggered an arms race to consolidate in insurance markets and hospital markets. And that is driving up costs in the market and leaving consumers with fewer choices. The ACA's core design requires consumers to purchase comprehensive and expensive plans in order to access the subsidies you talked about, Senator, and that those then lower premiums. The law regulates who can buy and sell what and where, and then offers those incentives to purchase the most expensive plans available on the market. This reduced competition in insurance markets as plans struggled to entice consumers. Many insurers simply left. So just a brief history here, the Government Accountability Office found that private health insurance markets massively consolidated after enactment of the law. The number of insurers per state decreased from 30 insurers in 2011, before the law was enacted, to 4 in 2020. Small businesses options also decreased. By 2018, more than half of U.S. counties on the federal platform only had one insurer. That is not a choice. This consolidation increased premiums and deductibles and reduced those options. But after a deregulatory effort under the first Trump administration, insurers re-entered the market. This led to the first decrease ever in benchmark premiums in the history of the program. And then state-based waivers allowed 20 states to better tailor the market to meet the needs of their consumers. That included a very successful program in the state of Wisconsin, Mr. Chairman, that lowered premiums by 10% and encouraged multiple insurers back into the market. By 2023, as a result of these deregulatory efforts, we had 6 marketplace insurers on average, up from 4 in 2020. But despite more logos on paper, county-level markets remain very concentrated. In many areas, 2 insurers hold 70% of the market. And of course, insurers offer coverage that pays for health care. And here the ACA created the context for massive acceleration in market concentration and power through 340B reforms and value-based care models that reward big institutions and big scale. In 2010, 80% of hospital areas were already highly concentrated. Today, 97% of markets are uncompetitive. This caused prices for hospitals to increase by 15 to 30%, and these costs flow through to the premiums, and they're the primary driver of the premiums and the 26% increase we're seeing next year. Basically, the ACA led to a system of localized monopolies, and that drove up premiums. Between 2013 and 2019, premiums increased 151%. As you indicated, Mr. Chairman, that's far faster than in employer plans and in just regular medical inflation. But the outrage, I think, is in deductibles. Deductibles in Obamacare have doubled since the law was enacted and are now 2 times higher than HSAs and 3 times higher than employer markets. Some deductibles we're seeing next year are $10,000, $14,000, $15,000 a year. That is not affordable for the typical American or the typical American family. I would call ACA plans outliers. They're inferior to most coverage on the market, and they're much more expensive for the average consumer. To sum up, in ACA markets, we no longer see affordable coverage. That's largely being driven by medical costs and the regulatory flaws in the law that are driving less choices for consumer, higher premiums, and higher deductibles. I appreciate the opportunity to testify today.
Thank you, Mr. White. Our next witness will be Mr. Taryn Bragdon. Mr. Bragdon is President and Chief Executive Officer at the Foundation for Government Accountability, which he founded in 2011 to advance free market principles. He previously served in the Maine House of Representatives from 1996 to 2000. He holds a Bachelor of Science in Computer Science from the University of Maine and Master of Science in Business from, is it Husson University? Mr. Bragdon.
Chairman Johnson, Ranking Member Blumenthal, and members of the committee, thank you for this opportunity. 6 decades ago, Medicaid was created for the truly needy: children, seniors, pregnant women, and individuals with disabilities and poverty. And for 5 decades, that remained mostly true. And then the Affordable Care Act radically changed that. Obamacare expanded Medicaid to a new class: able-bodied adults, roughly 70% of whom are childless. More than 60% self-report they don't work at all, and most are men. Today, there are more able-bodied adults nearly 40 million, on Medicaid than any other group. For every senior on Medicaid, there are almost 5 able-bodied adults, more than 4 for every disabled person on Medicaid, and more adults than children. And even though elderly and disabled Americans are more than 3 times more expensive to cover, taxpayers spend more in total for able-bodied adults on Medicaid. In the first decade of Medicaid expansion, the program cost taxpayers more than $1 trillion, which was twice as much as originally estimated. Meanwhile, as that's happened, 700,000 Americans with intellectual and physical disabilities are stuck on Medicaid home and community waiting lists, while Obamacare's able-bodied adults are always at the front of the line. Imagine 3 people: the most physically disabled person you ever met, an impoverished elderly grandmother with severe dementia in a nursing home, and an able-bodied 20-something-year-old man who chooses not to work. Thanks to Medicaid expansion, for every dollar states spend on that 20-something-year-old man, they'll get $9 in federal match. But for that severely disabled person or that frail elderly grandmother, for every dollar a state spends, the federal government will only match about $1.30. That 90% Obamacare match perversely means that in tough times, when states have to cut back, for every dollar they cut from that 20-something-year-old man, the state will only save 10 cents. But for every dollar they cut from the elderly or disabled, the state will save 43 cents of their share of the spending. Meanwhile, Medicaid expenditures for illegal aliens have also skyrocketed through a whole variety of categories: emergency services, qualified alien, or lawfully residing status, as well as through state-funded programs like in California, or by using loopholes like reasonable opportunity periods. In fact, the number of individuals applying and receiving Medicaid coverage through a reasonable opportunity period who were unable to prove their citizenship skyrocketed 400% during the Biden administration. And what's worse is states have taken advantage of abusive money laundering schemes under the guise of so-called things like provider taxes, state-directed payments, or intergovernmental transfers to bankroll even more expenditures for expansion adults and illegal aliens. Provider taxes allow states to draw down even more federal funds with little or no skin in the game. And while state-directed payments reward politically connected providers with Medicaid reimbursement rates sometimes above commercial rates. And despite it all, rural hospitals are in shambles. Medicaid expansion has crowded countless Americans out of private coverage, and if the remaining 10 non-expansion states were to decide to expand, it would push almost 6 million more adults from private coverage onto Medicaid. So as a result, in the first 8 years of Obamacare, hospitals' profits fell by 2/3 in Medicaid expansion states, and more than 70 hospitals have closed in those expansion states since 2014. That's why the big, beautiful bill, under which Medicaid spending is still growing by 33% over the next decade, created common sense Medicaid work requirements for these able-bodied adults. It addressed the abusive provider taxes and state-directed payments, closed loopholes that allowed coverage for illegal aliens, as well as created a $50 billion rural health reinvestment fund while cracking down on fraud, waste, and abuse. Obamacare's Medicaid expansion has left a trail of fiscal destruction. It's prioritized able-bodied adults over the truly needy, elderly, and disabled, and it rewards money laundering by states. That's costly and wrong. Thank you, and I'm happy to answer any questions.
Thank you, Mr. Bragdon. Our next witness is Dr. Brian Blaze. Dr. Blaze is the president of the Paragon Health Institute. From 2017 to 2019, he served as a special assistant to the president for economic policy at the White House's National Economic Council, where he coordinated the development and execution of numerous health policies. He received a PhD in economics from George Mason University. Mr. Blaze, Dr. Blaze.
Chairman Johnson, Ranking Member Blumenthal, and members of the committee, thank you for the opportunity to testify today. Because of a lack of options, my family with 5 children has been enrolled on an ACA plan for 4 years, so I've seen firsthand the real problems with the law. All government policies create winners and losers. Unfortunately, the Affordable Care Act created far more losers than winners. The ACA promised affordable, high-quality insurance, and it failed to deliver. Millions of people lost health plans they liked. Millions of families faced massive premium and deductible increases for worse coverage that included fewer doctors and hospitals. The ACA significantly contributes to rising deficits and unsustainable debt, leaving young families, their children, and future generations with higher taxes and inflation. The law entrenched an inefficient, insurance-dominated health sector with massive subsidies flowing straight from the Treasury to health insurance companies. Here are the basic economics. The ACA's regulations increased premiums for most people to decrease them for a small number. Subsidies were then needed so people could afford coverage that the government regulations had made more expensive. The underlying regulatory and subsidy structure leads to ever-escalating premiums and prices. Higher premiums create pressure for still more subsidies. And those additional subsidies only worsen the underlying problems, fueling the very premiums and price escalation they were meant to offset. If Congress wants to make health care more affordable, it must reform the structure itself, not throw good money after bad. In 2014, when the ACA's key provisions took effect, individual market premiums rose nearly 50%. From 2014 to 2016, premiums increased nearly twice as rapidly as employer plan premiums. The ACA's subsidies are ill-designed and inflationary. The enrollee's share of the premium is capped, regardless of the total premium. Because enrollees pay only a small slice of the premium, insurers face virtually no price discipline, giving them incentives to inflate costs rather than improve value. The ACA regulations drove higher costs. For example, under the medical loss ratio, insurers must spend a minimum share of premium revenue on medical claims. In other words, to increase profits, insurers must raise premiums. The ACA's essential health benefit mandates requires all plans to cover the same set of services regardless of what consumers want or need. These rules increased wasteful spending and premiums. COVID-era subsidy boosts resulted in fully subsidized coverage and led to massive fraud in the program. In 2025, there are 6.4 million people enrolled in fully subsidized plans who are not eligible, costing $27 billion. In 15 states, there are more than twice as many enrollees in fully subsidized plans than are eligible. Many of these enrollees were signed up without their knowledge or consent, victims of massive fraud schemes. A staggering 40% of fully subsidized enrollees used no medical services in 2024. Many of these zero-claim enrollees are phantoms. Federal taxpayers sent more than $35 billion to insurers for people who did not use their plan a single time. The ACA's subsidy structure, particularly with the COVID credits, incentivized small employers to drop coverage. The percentage of small employers offering a health plan has dropped by 1/3 since 2010. The ACA has also led some state and local governments to drop retiree health coverage, offloading that expense onto the federal taxpayer. The COVID credits, by lifting the subsidy cap at 4 times the federal poverty level, encourage early retirement. It has led to situations like a retired couple in their mid-50s who earn $136,000 in pension income from government service, receiving $15,000 in ACA subsidies. ACA premiums will rise next year because of underlying flaws in the program. Only a small portion of the increase is from the expiring COVID credits. The underlying ACA subsidies provide enormous protection for more than 93% of enrollees from high premiums. Most will pay less than $80 a month for a plan next year, with the federal taxpayer picking up 80% of the premium cost and a higher percentage for lower income enrollees. The Inflation Reduction Act set the COVID credits to expire after 2025, and they should end. Continuing them would exacerbate fraud, increase premiums and healthcare prices, drive out alternative financing arrangements, remove the imperative to reform this failing program, and drive the country deeper in debt. Real reform does not mean spending more taxpayer money. It means giving consumers the freedom to choose the coverage and care that best meets their needs. Thank you.
Thank you, Dr. Blaze. Our final witness is Ms. Shauna Verstegen. Ms. Verstegen is the fitness director at Supreme Health and Fitness, a small gym located in Madison, Wisconsin. She and her family receive health coverage through the ACA Marketplace. She received a degree in kinesiology.
You got this. You got this. Kinesiology.
I actually tried to
Kinesiology.
figure it out, but I'll let you say it. Exercise science from the University of Wisconsin. Ms. Verstegen.
Good afternoon, and thank you so much, Senators, for the opportunity to share my family's story here today. My name is Shauna Verstegen, and I live in Madison, Wisconsin with my husband and our two wonderful little boys who are 7 and 10 years old. I'm a proud member of Moms Rising. I'm here today as a proud user of the Affordable Care Act and the healthcare marketplace. Like so many other working families, I don't know what my family would do without it. My husband and I both work in the fitness industry as trainers and group fitness instructors at a really wonderful small gym in Madison. We love our jobs, and we both work very hard helping others on a daily basis. We've both been employed there since high school, so almost 30 years. Due to the small number of full-time employees at our gym, the owners don't provide us with health insurance. So we purchased health coverage for our family through the ACA Marketplace for many years. We currently are paying $460 each month for our family of 4. Without the enhanced premium tax credits, our premiums are projected to increase to an unaffordable $700 a month in 2026. Losing enhanced premium tax credit support would create a real crisis for my family. Trust me, we've already cut back on spending in every way we know, along with adding lots of additional work hours to both of our schedules. We rarely go out to eat. We haven't gone on a vacation in years, and for 2026, we're looking at scaling back some of our children's sports and other activities our kids enjoy. With the threat of the subsidy ending, we're exploring all of our options. My husband is even considering finding another job that offers employer-sponsored health coverage. That's been really emotional for us because although we're certainly not above working at a large realtor like Costco, it would mean setting aside the skills he went to college for and work that we truly love. We're also considering shopping for a cheaper plan, most likely with a higher deductible, but that's risky for our financial stability. We also did talk about not being covered at all, but with 2 kids, that didn't sound like a safe choice for our family. These options and decisions are tough and, quite frankly, really scary. We're a middle-class, healthy, hardworking family, and like so many others, we're struggling to make ends meet with the prices for food, housing, clothing, electricity, and everything else skyrocketing. The prospect of our health insurance premiums increasing by several $100s is devastating for us. It would be a major financial blow to my family. This truly doesn't feel like it's about politics or polling or winners or losers in Congress. Families like mine in every state, red states, blue states, everywhere in between, rely on the Affordable Care Act. This is about real families, real kids, and real health. Speaking of health, I grew up with a mother who had Huntington's disease, a devastating genetic neurological brain disorder. Living at risk of inheriting it myself, I spent years fearing that I would never be able to obtain health insurance. Although I ultimately tested negative for the disease, the Affordable Care Act gives me a peace of mind that I will be covered no matter what health challenge I or my family may face. Sadly, many in the Huntington's disease community who've become like family to me did not receive that same test result. At our state chapter convention last weekend in the Wisconsin Dells, there was so much to celebrate. Just over a month ago, new research identified a potential treatment, a really big moment of hope for our community. But that hope was shadowed by fear. Many families expressed deep concern that the Affordable Care Act may be overturned, and they may lose the access to the essential health care that they depend on. None of these individuals did anything to deserve the genetics they were dealt, and they too deserve affordable, reliable health care, just like every one of us. The Affordable Care Act is essential for entrepreneurs and small business employees like myself to afford health care coverage. The Affordable Care Act is essential for those with pre-existing conditions like Huntington's disease to afford health care coverage. The Affordable Care Act enhanced premium tax credits are essential for millions of Americans to be able to afford health care coverage. I am here as an example of the people who you all represent. I'm a working middle-class mom speaking for 24 million other Americans who rely on the Affordable Care Act to keep their children healthy, their bills manageable, and their futures secure. I ask you sincerely and urgently to stand with us and support the families who need you now more than ever.
Thank you, Ms. Verstegen. I'll start with questioning. You know, I purchased health care in Wisconsin for my smaller business for about 30 years. And just quite a few years before we even got over 100 employees. So I'm very familiar with the small employer market. We actually had, for 1 year, when one of the companies was really trying to buy share, where we had $0 deductibles. I mean, literally, everything was covered. There was no deductibles, there's nothing. I think next year they raised premiums 40%, we had to, switch over. But we were talking about $100 deductible per person with out-of-pocket maximum of a couple thousand. I think when I left in 2010, the most I ever remember was a couple deductibles, $2,500 per person with an out-of-pocket maximum about $5,000. Again, it's off the top of my head, but again, nothing like you're describing right now. So I would like to, and again, appreciate you working with our staff trying to fill in the details here, but I'd just like to kind of get a feel for, what your current situation is and kind of where you've been in terms of healthcare. So going back to 2013, I'm showing you the rate of increase since the implementation of Obamacare. What kind of insurance did you have in 2013?
Yeah, in 2013, our gym was a bit larger. It's a racquetball gym, so I don't know if any of you play racquetball. You probably don't know many who do. Therefore, it has gotten to be much smaller. And back in 2013, we did have employee-sponsored healthcare at that time.
Okay, so you had employer-sponsored?
Yeah.
Did you contribute anything to it?
I did, and it was actually really.
I don't expect you to remember. Do you remember approximately?
No, I sure can, and I remember this because
Okay.
my husband and I weren't married yet. And because I was a female of childbearing age, I paid almost $600 a month.
Okay.
And he had to pay under $200 a month, and we found that really unfair. So it was actually, even though it was employee-sponsored, still quite unaffordable.
So then 2014, 2015, you're also on employer-sponsored care, correct? Is it
Yes.
was the same one, similar
Yes.
types of rates?
Yes.
So again, you were paying about $600 a month.
Yes. I can't give you, I apologize, I don't have the exact numbers on me.
So in 2016, your employer no longer covered employees, so you end up having to get your insurance through the Obamacare exchanges. Next thing I have is in 2019, you were paying $1,000 a month for a silver plan.
In 2019, I don't know if it was a silver plan. I know it was a higher tier plan that we have
That's what I was
right now.
when you were looking.
Yes. So
Okay.
I chose a higher plan, and it was about $1,000 a month.
Do you remember what the deductible was? And by the way, do you have deductibles and then an out-of-pocket maximum? Is that how that works on your
Yeah,
exchange?
this year I don't have deductibles. I have fairly high copays and an out-of-pocket maximum. I do not remember what my deductibles were in that year that I was paying about $1,000, but I
Okay.
know they were significantly less than they are now. We have a lower tiered plan now.
Because now you say you switched to a bronze plan,
Mm-hmm.
and that was $250 a month. But you said I'm assuming you're assuming it's out-of-pocket maximum of $14,000, or is that just a deductible of $14,000?
The $14,000, I believe, is an out-of-pocket maximum. It's not $250 a month. It's $460 a month.
No, in 2021.
2021.
That is $250 a month.
Okay, yeah.
So now.
Yes, when we dropped to that lower tiered plan, yes.
And you were getting subsidies back then?
I don't believe so.
Back in 2021, you weren't qualifying for subsidies?
I can't recall.
Okay, I would think paying $250 a month, you probably were. Can we put up this next chart? And I've got this sheet in front of you. I've tried to cobble together what I think is representative of the kind of plan you're on. I'm not saying that this is yours, but this would be somewhat similar. This is a bronze plan. So for 2025, you're saying that your net premium is $460. And I know in your House testimony, you said you had a subsidy of $800. So your gross premium was $1,260 a month. So on an annualized basis, that's $15,000 gross premium. You got a $9,600 subsidy, and you paid $5,500 bucks. Okay. Now, in Wisconsin, we're not the national average 26% increase this year. We just read this about 17%, but I did this based on 26. So assuming the national average gross premium increase, your total annual premium is going to go from $15,000 to about $19,000. Is that about what you're seeing in your? It's probably a little less than that because what I heard in Wisconsin, our average is about 17.
A little less than that, yeah.
Okay, but somewhere around $18,000, $19,000.
Yeah.
You're saying you're going to now be paying $700 a month. So that translates to $8,400 annually, correct?
Yes.
Times 12.
Yes.
So that means you'll be getting a subsidy still of about $10,600, roughly, about $10,000 subsidy.
Now my subsidy is
If your premium's $18,000, $19,000, you're paying $8,400, you're going to get about a $10,000 subsidy, even with the enhanced subsidies going away, the temporary subsidies, when they expire.
Yeah, the enhanced was much more than that. Right now, it would go down to 400.
Okay, the last column is, what I did is I deflated the $19,000 back to 2013. And that gives us about $8,500 is what your premium, a similar type of plan's premium would have been before the ACA. Then if I reinflate it, based on employer-sponsored insurance, going up about 64%, your premium should be no more than, should be less than $14,000. That's a $5,000 difference. Now, if you inflate it just based on inflation, 39%, you'd be saving about $7,500 in premium. So again, I'm just laying this out. This is what's happening. So there's no reason for a plan like yours to cost $19,000 a year. But even with the temporary subsidies that, again, we're not the ones that set those to expire. That's what the Democrats did. Even with those subsidies expiring, again, you'll still be getting $10,000 to $11,000 subsidy. The problem is the premium, the gross premium, and that is being, we'll talk about this later with our other witnesses, that's Obamacare's faulty design. The fact that it forced all of the individuals like you in these individual policies to bear the full cost of covering people with pre-existing conditions. Prior to Obamacare in Wisconsin, we had something called a high-risk pool. It worked great. Now, it wasn't perfect. You could have tweaked it to make sure that everybody with pre-existing conditions were covered, but Obamacare did away with those and put that full cost of covering people pre-existing conditions on the backs of people like you. That's why health care primarily is so expensive on the individual exchange. There's many other reasons, but we'll get that into witnesses.
Is this can I answer?
Sure.
I know it wasn't exactly a question, but again, I'm not here to speak on, I'm clearly not an expert on why the co-pays and why the premiums and everything are rising, but I do know that the Affordable Care Act is the only option for coverage for my family. It's the only option for coverage for Huntington's disease families, for entrepreneurs. And I would really hope that lawmakers would work together to help rein in this corporate spending to help bring that down. And quite honestly, yes, the premiums are going up, but so is my gas, so is my electricity, so are my grocery prices. And I don't feel like the answer to this is to increase our premiums more. I know you said this is Democrat-sponsored, but Republicans and everybody have the power to pass this extended premium tax credit so our bills don't go up even more. I'm not here to fix this today, but please help us for 2026.
The reason this is your only option is because Obamacare made it your only option. The reason you can't afford it is because Obamacare made premiums skyrocket. So again, it doesn't make any sense to throw hundreds of billions of dollars to hide and mask the faulty design of Obamacare. I am happy. I would be more than willing to sit down in good faith to work with Democrats to repair the damage done by Obamacare and transition to a system that actually keeps costs down. But again, when you've gone from an insurance policy that was probably about somewhere around $8,000 before Obamacare to now it's $19,000, four times more the rate of inflation. Yeah, everything's up, but everything's up 39%. Obamacare rates are up, what did I say, 169%? I forgot the exact figure. Again, It's the faulty design, but then I'll turn it over
Respectfully,
to
Senator, if I had tested positive for Huntington's disease, what would my option have been then? I
Again,
wouldn't have had an option.
So what we would have done is, of high-risk pools, we would have had guaranteed issue within those. The cost would have been spread over everybody. That's the way it was originally.
My friends who tested
Everybody-
positive were not
everybody
able to
participating
afford
had a
in a
small
plan.
percentage onto their insurance, and it paid for the high-risk pools. It worked marvelously, but
It didn't.
Obamacare outlawed that. But anyways, Senator Blumenthal.
Shauna, let me begin by very sincerely thanking you for being here today, because it takes a lot of courage to talk about your personal story, about your mom having Huntington's disease, about the sacrifices that would be made by your own family if these healthcare tax credits are not extended, about the real-life impacts on you. It takes bravery to do it. And so I'm going to explore a little bit more about that story and about the powerful way that you've articulated what it means to have, in your words, peace of mind, knowing that your mom had Huntington's disease and that it is a genetic disorder. And I have to tell you, I am struck by your description of the meeting recently of your Huntington's disease community, your state chapter, when you heard about a new treatment that might be available. Very exciting for people, and I'm quoting you, none of these individuals did anything to deserve the genetics they were dealt, and they deserve affordable, reliable health care just like every one of us. That new treatment will be available to them only if they have health insurance, correct?
I assume so.
And they're your friends, your neighbors, and your own family, because we all know that your two beautiful children inherit the genetic makeup of your family. So I wonder if you could talk a little bit more about how you're affected in the way you look at your kids when they go to bed at night, the way you see your family, the way you and your husband think about your lives, and the possibility that you may not be able to afford health insurance.
Yeah, well, it's caused some very serious conversations in our household the past several months since we've known the possibility of not having this extended premium tax credit, and already working really, really hard to make ends meet. We are having these conversations about what else we can cut out. For a while, the conversation included, do we just go without health insurance? But that's too big of a risk that we don't feel comfortable doing. And right now, we're leaning toward my husband leaving the small business that we love so that we can have affordable health care.
And the treatment that's potentially available to people who suffer from Huntington's disease will be available only if they have that health insurance.
Well, unfortunately, that's still probably a few years in the works before that's available. But yes, it will require health insurance to be able to afford that. It'll be a pricey treatment.
Any new medical or
Yes,
scientific
of course.
advance.
But anybody with Huntington's or living positively with Huntington's relies very much so on health care. And even somebody who is tested positive who might be very healthy for a long time, before the Affordable Care Act, they were not able to get coverage because of the knowledge that they will become sick someday.
Now, that new treatment could well be expensive.
It will be very expensive.
Sometimes advances in medical care are expensive, especially if they are newly developed and they haven't been mass produced, like pharmaceutical drugs become less expensive the more generics are available, correct?
Mm-hmm.
I hope that we will take action to lower the costs of health care. And I've actually strongly supported those kinds of efforts. I've consistently called on insurers to reduce their rates and on providers and drug manufacturers to reduce the costs of their services or products. I've also led investigations into abuses by insurers participating in the Medicare Advantage program, I'm hoping the chairman will join this effort. One thing that will reduce costs is giving Medicare more power to negotiate lower drug prices. I'm hoping the chairman will join me in that effort as well, and others on this committee. And I believe strongly that we can help eliminate fraud in this system by taking action against the insurers, brokers, and navigators who are exploiting the weaknesses in this system for self-gain. And that's why I have sponsored measures to take action, particularly enforcement action, against them. One is the Insurance Affordability, the Insurance Fraud Accountability Act, which would impose criminal penalties on brokers who engage in deceptive marketing or enrollment practices. I'm hoping maybe the chairman will join me and other Republicans as well. These are specific steps we can take to stop fraud. We should have zero tolerance for fraud, no matter whether it's in the billions or the pennies. I hope all of the witnesses will agree with me on that point. But it doesn't mean throwing the baby out with the bathwater, as the saying goes. It means focusing, targeting, and using new laws as well as existing enforcement authority and giving them the resources that they need to go after fraud. So I'm hoping that we will have a second round of questions, Mr. Chairman, when we can explore some more of these issues. I have additional questions, and for right now, I'm going to abide by the time limit because my time has expired.
Senator Scott.
I want to thank the chairman for putting this together. Back in 29, I organized a group called Conservatives for Patients' Rights to try to figure out how, if we're going to pass health care reform, let's do it in a manner that drives down the cost of health care. Because I think all of us want to make sure people not just get health care insurance, but they actually get health care. Health care means that you can afford to go to a doctor. Health care means that you're not bankrupt if you have a catastrophic illness. And unfortunately, what passed didn't make any sense. As we know, when Obama promised you wouldn't lose your doctor, what happened with that? Biggest lie of the year. He promised you wouldn't lose your plan. No, you lost your plan. Then they set it up to where there was an increased incentive to take care of able-bodied adults rather than, in my state of Florida, you got paid, the state got paid more money to take care of able-bodied adults than people on disability. I mean, that actually made no sense at all. Then what's happened is exactly what we thought. When I became governor, so I was running different companies at the time. I bet the deductible was, I can't imagine it was more than $1,500. A catastrophic plan was $3,000, or it couldn't even be $5,000. And now what you look at is deductibles have skyrocketed, premiums have skyrocketed, co-payments have skyrocketed, and basically what was a catastrophic plan back then is the normal plan now. So it doesn't make any sense. And then to mask the cost of these premium increases, which the premiums are going up. Why are the premiums going up? Well, hospitals are charging more money. Drugs are charging more money. All the players in it are charging more money, and then there's nobody there that says, oh, do I really need to spend that money? Like all of us have children, know that our children spend the money they make way more efficiently than this money that we give them. And so it just seems to me, if we actually want to fix this, there's really only two things that really are going to fix it. One, we've got to make every American a consumer of healthcare. That means when you go buy something, you look at the price, you look at the quality, you look at the service, you question it. That's what we should be doing in healthcare, but people don't have actually the opportunity to do it because they're dictated by either the government or they're dictated by their employer of what they have to buy. They don't have choices. They don't have a choice of a whole bunch of different plans they get to do. Then on top of that, let us, we need to make sure anybody that needs health care, they've got to have access to a plan that they can afford. And before Obamacare, I think it was 40-some states had high-risk pools that really took care of the people that had chronic problems that were significantly higher than what a normal person would have. Unfortunately, Obamacare stopped all that. So the only way we're going to get this fixed is, number one, we've got to make everybody a consumer. So if we're going to get, my belief is I did it when I was a consumer. I let my employees choose their health care, choose their plan. I didn't say, oh, you have to buy this plan. They had co-payments, they had deductibles, so they had incentives to be healthy. So we need to be able to do that with regard to any government-sponsored program. And then there has to be unbelievable choice. So one person might be worried because of family history of something. Another person is not worried about that, so they don't want to do it. So we got to figure this out. So now we've got these Biden COVID-era subsidies. It's unbelievable fraud. The money's going directly to insurance companies. How does that make any sense? It goes just check directly to the insurance companies. We know millions of people have been getting supposedly been covered. They don't even know it. They don't even know it. I mean, the money just went to an insurance company, right? Nobody knew it. And so I'm glad the ranking member wants to crack down this fraud. Why didn't they do it when they passed this? I mean, there was unbelievable fraud allowed. I think all you had to know is somebody's name, address, and birth date, and you could sign them up. And people were doing it all the time. And then we have people that are worth $1 million, and we're subsidizing their health care. Now, most Americans are not worth $1 million. So we have people that are busting their butt, working every day, 40, 50 hours a week, and we're subsidizing health care of millionaires. That's wrong. And that's exactly what these Biden COVID-era subsidies did. So I want to make sure people get health care. I want to make sure that if you have a chronic illness, you have a plan to get it. But this idea that no accountability, insurance companies make all the money, and no accountability, and for rich people, it makes no sense to me. So, Mr. White, my staff looked at some of the plans available in Madison, Wisconsin on the individual exchange. The premiums are too high, right? And deductibles are too high. And so often, I mean, you can get insurance, but you don't get health care, right? So how's that as compared, what you would get through these COVID-era plans, or the Obamacare plans covered, in the mass cost by the COVID-era plans, how's that as compared to employer small group plans? What's happened to the cost?
The tragedy, I think you put your finger on it, is that for consumers, you can only use your subsidy on Obamacare. And those plans, in general, have 3 times higher deductibles than the average Obamacare plan. So the average Obamacare plan, the silver level unsubsidized deductible, is $5,000 a year, thereabouts. The average small group plan is about $2,000.
And you can't do it.
You cannot use your subsidy.
Why would they do that?
That's how the law is written.
But why would they do it? Why would that make any sense? Why wouldn't you have an option?
Why wouldn't you have an option?
Yeah.
I don't know. The authors of the law designed it this way, and what we saw pre-Obamacare, about 50% of small businesses offered coverage. Post-Obamacare today, just 31% do. So 12 million people have gone from small business coverage, and they're now getting Obamacare, which means
Small business with options.
they're just, the small
had
businesses
options when
dropped coverage,
Yeah.
and they sent their employees onto the exchange, where they're paying 3 times higher deductibles, higher premiums, including unsubsidized premiums, and they're getting worse access to care. 80% of the plans on Obamacare right now are exclusive HMO type plans or exclusive provider arrangement plans, which means if I tried to go out of network to a doctor, the insurer would pay $0. That is significantly impeding my access to care. We have to keep in mind, coverage does not equal care. Just because I have an insurance card doesn't mean I can see a doctor. And what we're seeing in Obamacare right now, compared to the employer market, is I can't see my doctor. I can't afford the deductible, and the doctor's not in my network. If I just stayed with my small business, if we created incentives for small business to retain employees, we would have far lower deductibles, far lower premiums, far greater access to doctors, and taxpayers would spend 3 times less.
Thank you.
So let's break this down to the fundamental components. You know, to answer your question, the purpose of Obamacare, because he knew it wouldn't hold on costs. I mean, this was predictable. I'm sitting there in Oshkosh. I mean, that's why I ran for office. I knew this would be a miserable failure, right? The reason Democrats passed Obamacare is because they wanted it as the next step to a single-payer system, which is why they had the federal government pay $9 for every dollar the state spent on a single, able-bodied, working-age, capable adult, right? Which has led to all kinds of massive fraud. And quite honestly, really caused states to structure their budgets around it, hospitals to structure their budgets around it. So when we try and reform it, like Senator Scott was going to do, let's just cap it. If you want to, as a state, cover single able-bodied, fine, but not at 9-to-1 match. Do like you do a disabled child. $1.33. So again, the fundamental of Obamacare was this is our way to get to a single-payer system. But let's talk about the fundamental flaws, why it didn't lower costs. Consolidation of industry. It led to that, which, by the way, the cost of employer-sponsored plans is a lot lower than the exchanges, but it's still way too high. And I've got to think that the flawed part of the consolidation contributes. So there's no reason for insurer plans to be almost double the rate of inflation. So again, talk about the consolidation of the industry as succinctly as you can is one of the fundamental flaws of Obamacare.
Yeah, I think to answer your question, the law creates this one-way street into government-run healthcare. That's absolutely true. Once the small businesses drop their coverage, they generally don't come back, which is a huge problem. In the consolidation space, though, what we saw was, again, massive consolidation in the insurance markets and massive consolidation in hospital markets. That hospital market consolidation drove up prices by 15 to 30%. That flows directly through to premium.
And again, that's just basic economics. When you have less competition, people kind of look around and go, oh, we can charge that, we get away with it. And also the medical loss ratio, there's no incentive to reduce costs anywhere along the supply chain, right? There's absolutely no incentive to reduce costs.
It's worse than that.
It's all to increase costs.
The medical loss ratio actually encourages higher premiums, as Dr. Blaze indicated. It also creates incentives for insurers to buy practices, which they've done, and pharmacies and PBMs, which further consolidates the market because they can drive revenue through those entities that then allows them to avoid the cap on profits. So it further consolidates the market and drives up costs across those markets. All those costs bleed over into the employer market. I think what you see in the difference between the 168% increase in Obamacare and the 78% increase in employer markets is the employers are not subject, the large employers are not subject to all the mandates and regulations and requirements that the authors of the law put on the individual market, making it much more expensive. Those costs are built in, they're structural, they will stay there. It doesn't matter how much you subsidize them, the cost will just keep going up and
again,
up and up.
the full burden of guaranteed issue is on the individual markets as well, right? Mr. Bragdon, talk about the lack of access to disabled children because they're being crowded out by single able-bodied working-age childless adults. I mean, talk about that outrage because that's not discussed enough.
I think one of the most perverse parts of Medicaid expansion in Obamacare is when Obamacare loaded the lifeboats, it said non-working men first. and then pregnant women, the elderly, disabled, kids with disabilities later. And it creates this incredibly perverse system, as you talked about, that contorts all sorts of money laundering schemes by states to maximize the expansion population, but it also then incentivizes that kids with disabilities or adults with disabilities are on the chopping block first. Because when states need to save money, they save more by cutting services to those individuals.
Is it also true that, Biden allowed providers to charge commercial rates for the Medicaid expansion population?
Correct, so you had this dynamic.
So, just the providers themselves get reimbursed more for an adult, healthy adult versus a disabled child, correct? So what do you think providers are going to do?
Correct, they're going to respond to financial incentives. And so if I make more money by serving a Medicaid patient of an able-bodied adult than I would an elderly person or disabled person on Medicare, of course they're going to be prioritized.
Dr. Blaze, talk a little bit about the impact of putting all the guaranteed issue cost burden on the exchanges, basically, correct?
Yeah, it's...
Because before individual, they had the high-risk pools. And as an employer, that worked beautifully. When we would have somebody they'd call lasered out of our plan, somebody who had cancer or something, they would go into high-risk pool, exact same coverage. Same deductible, all that type of thing, same rates. It worked great. And then when they got well, they'd come back onto our plan. But go ahead.
Yeah, so there are 35 states that had high-risk pools, and that's if the person couldn't get private health insurance, they would apply to the state high-risk pool, and they would get coverage through the high-risk pool, and that was subsidized. The critique of high-risk pools was they weren't adequately funded. What we could have done instead of the gigantic Obamacare regulatory and subsidy structure, which inflated premiums for everyone, is just provide more funding for state high-risk pools, but we chose a different approach.
I think they were funded well in Wisconsin. And anyway, that's really got to be the first step. We talk about free market reforms. We have to do that as the way to make sure that people with pre-existing conditions get coverage. We've got to tweak those high-risk pools, but we have to first reinstitute them, correct?
Yeah.
That's kind of like, that's sort of the first step of things we have to do.
Yeah, I think...
Which, again, when you dismantle something, it's kind of a pain to have to reestablish it, but that's what we have to do.
Yeah, I think if you're going to revisit Obamacare's architecture and really lower premiums, then reinstating high-risk pools and having them funded is a reasonable action.
Well, if you don't revisit Obamacare's architecture, you're not going to bring down costs.
No, Obamacare inflated costs significantly in the individual market, and one of these, the medical loss ratio. One of the things that we've seen, because we have all of these phantom enrollees, and so insurers have made a lot of money on phantom enrollees, but the minimum loss ratio means that they need to spend that premium revenue. So they have very bad incentives to look the other way on extremely high costs on the other end. So you're getting very inflated costs for high utilizers that benefit providers and big hospital systems, and there's a lot of sort of corrupt behavioral health and addiction treatment services that are taking advantage of that system.
That you have to explain. I think I sort of understand, but that's interesting. Senator Ernst, are you ready to go?
Thanks to all of our witnesses for being here today. And this is a really important topic, and I do hope that we can get this government shutdown over and open back up so we can have follow-on conversations regarding this topic. I visit with Iowa farmers every year, Iowa, what I call my Iowa River to River tour. And I hear way too often about the crushing weight of healthcare costs on farm families. And it's really disheartening to me to hear that, but it's not at all surprising. The Unaffordable Care Act's one-size-fits-none model ignored the realities of self-employment, seasonal cash flow, and the absence of large corporate employers across our farm country. So our spouses, when it comes to farm families, oftentimes they're serving as the family farm's bookkeeper, maybe a mechanic, they're a veterinarian, they're helping with all of the farm activities, all rolled into one. Many of them have been forced into taking off-farm jobs, not for passion, and I love that people are able to pursue their passions, but, in farm country, we do what we need to do to make sure ends meet. And so we have a number of those spouses that have gone to get employment where they have employer-sponsored coverage. That means 40 to 60 hours a week away from the very enterprise they're trying to preserve for the next generation. And this isn't a one-off anecdote, it's reality for far too many Americans, including my own family. I'm in a farm family. My brother is a type 1 diabetic. He had to leave the family farm operation to take employer-sponsored healthcare coverage with his employer. My sister is a type 1 diabetic. She and her husband do our family farming, but she also works a full-time job off the farm to get employer-covered healthcare. Okay, so we do have to make very tough choices. But unfortunately, Obamacare is unaffordable. And because of this horrible system that is out there, some families are not able to choose to do what they want to do, and they've been driven into other opportunities. But Democrats in Congress have branded Obamacare as a chance to bend the cost curve downward, and that's not true. As it turns out, the only thing it's bending is the bottom lines of every farmer, whether they're in Sioux Center or over to Keokuk in Iowa. And the numbers don't lie. Farmers and their families are subsidizing a broken system that doesn't serve them. Rural America needs solutions that don't force spouses to find off-farm work or forego health insurance altogether. Premiums for both plans on and off the exchanges are going up for individuals and small groups, in large part due to the Unaffordable Care Act's many mandates. This is particularly challenging for self-employed folks and small businesses. So, Mr. Blaze, if the ACA was supposed to expand choice and lower costs, why are so many counties in Iowa down to just one insurer on the exchange? And why are premiums still unaffordable, even with taxpayer-funded subsidies?
Well, Senator, thank you for that question. And some states like Iowa have taken steps to address problems with Obamacare by opening up like Farm Bureau plans and enabling more people to purchase that coverage that's not subject to Obamacare rules. But the answer to your question is that Obamacare failed. It reduced choices and options for individuals.
Exactly. One insurer. One on most of our exchanges. Mr. White, do you think that having coverage for many farmers in Iowa means that they have access to care?
No, I think getting an insurance card in your wallet doesn't mean that you have access to a doctor or a drug on the plan's formulary. What we're seeing increasingly is these plans are HMOs or exclusive provider organizations, 80% of them on the exchanges. That means if you try and go out of network or get something off formulary, the plan pays $0. That's not access to care. We're paying, like, the premiums now are so high, the deductibles are so high that families are struggling just to meet those obligations, but then they're being massively constrained to the point where they're finding difficulties just going to a doctor or finding a doctor in their area to help them. This is not good coverage. This is really inferior coverage compared to what we see in Farm Bureau plans, in small businesses, and large businesses.
Right, and as the chair had stated earlier, so many of those plans, the high-risk pools, they were all outlawed by Obamacare. I'm also concerned about Iowans being signed up for policies without their knowledge. This is a really big deal. It should be a big deal for every single American that is paying taxes out there. Mr. Blaze, I believe you spoke to that. $0 premium plans have enabled those scammers to take advantage. And look no further than enrollment for individual plans in Iowa doubling or quadrupling, depending on the plan type, since 2019. So, Mr. Blaze, 9 out of 10 healthcare dollars flow through third-party payers. Do you think this has a role in the levels of fraud and waste that we see in Obamacare today?
Yes, Senator, thank you for that question. The Biden-era COVID expansion of the subsidies led to massive increase in fraud in the program. The availability of fully subsidized plans allowed bad actors, brokers, agents to advertise things like free gift cards, cash, to get people's information to sign them up for plans. Bloomberg did a report on this. They quoted a customer service agent who said half of the people that they were signing up had no idea that they were enrolling in coverage. And the big winners are the health insurance companies. So they're getting monthly checks on behalf of all these enrollees that have no idea that they're signed up for coverage.
Right, thank you. And I do think this is a real issue, and I do hope we can reopen the federal government. I hope Democrats come along with us and vote yes to open the federal government so that we can have further discussions. But I must say to all of my Democratic colleagues, we need to have a robust discussion about what is wrong with Obamacare. If we truly want to find accessible ways to provide health care to individuals, affordable choices, then we need to identify all of the failures within this system. So then maybe more people can pursue their dreams. But when it comes down to personal responsibility, my family members have had to make that hard choice to seek employer coverage. It is a personal choice to take care of their own families. And I think personal choices then shouldn't be the obligation of the federal government to find ways to fund access to health care. We all need to figure this out. But again, I really appreciate the opportunity to have this hearing today, and I hope that, again, we can open the federal government and have real discussions about these very real problems for Americans as they're trying to access health care.
Senator Hassan.
Oh, thank you, Mr. Chair and Ranking Member Blumenthal. Good afternoon to our witnesses. Thank you so much for being here. I just want to follow up a little bit on what Senator Ernst was just saying, because, of course, Democrats and Republicans want to lower the cost of health care. There is bill after bill filed on a bipartisan basis in this chamber that would do that, including approaches to some changes in the Affordable Care Act. I remember, of course, when the Affordable Care Act was passed, when so many of my constituents in New Hampshire with pre-existing conditions could not get health insurance, full stop, impossible to get. Where people were making the same kind of choices that Senator Ernst just talked about because they couldn't get individual insurance under any circumstances, so they went and took a full-time job or didn't move to a new opportunity because they would have had to wait for a year to get health insurance in that new job. I remember as governor the difference the Affordable Care Act made and has made with Medicaid expansion when people who were chronically ill and couldn't work and therefore couldn't have insurance got insurance through Medicaid expansion, got their diabetes under control, went back to work, and went on to private insurance. That is exactly what the Affordable Care Act has done for tens of thousands of people in my state. And as I hear my colleagues talk, we do need to reopen the government, and we need to take care of a mounting crisis for which we have a very small window to solve, because there are insurance premium bills hitting my constituents' web pages or mailboxes that show them directly that premiums are skyrocketing in New Hampshire right now, both on the Affordable Care Act and on the private market. Open enrollment on healthcare.gov began on November 1st, and I've heard directly from Granite Staters who, when they logged on, saw that their premiums have doubled or tripled for next year. These premium increases are being driven by the Republicans' refusal to extend the enhanced tax credits that help Granite Staters afford their health care. This week, I met Nicole, a mom of 4 in Exeter, who is a full-time caregiver for her children, all 4 of whom have disabilities. Her husband runs his own business. He also has a chronic health condition. So Nicole and her husband get their health insurance on healthcare.gov, and their premium is set to triple in January due to the expiration of the enhanced tax credits. Nicole told me that she does not know how her family can pay thousands of dollars more for insurance next year. And I'll also add that Nicole's children with disabilities have been covered by Medicaid. But because of the changes in the great big bill that was passed in July, 50% of America's children are covered either by Medicaid or CHIP insurance. They are now not sure how her children are going to qualify for health care if some of the changes to Medicaid present barriers for that coverage. My office has also heard from Juliana in Sharon, who runs a small business with her husband and counts on healthcare.gov to get health coverage for herself, her husband, and her 2 children. Juliana is facing a premium increase of $600 per month next year, an increase so large that her family may not be able to afford any insurance at all. These are just 2 stories from the constituents who have reached out and urged me to protect their health care. So as we talk about reopening the government, the Democrats are very clear. We need to take care of these enhanced tax credits. They expire at the end of the year. People are in open enrollment right now. If you want coverage starting January 1st, in New Hampshire at least, you got to choose your plan by December 15th. And know whether you can afford it or not. And we know if a whole lot of people drop their health insurance, not only is it devastating for them, but it also drives up the cost of private insurance of those employer plans, because the fewer people who have coverage, the fewer people end up bearing the brunt of the overall health care cost, which in this country is too high, and that is something we should work in a bipartisan way, and there are lots of bipartisan proposals to do that. But that does not change the fact that at this moment, in this country's time, millions of people are facing huge increases in their health insurance bill that is going to further undermine an already fragmented and difficult to navigate and expensive healthcare system and just drive prices up. So when Democrats say we want to do 2 things, we want to reopen the government and we just want to extend an already existing premium subsidy for a year so we can continue to work on the very issues that I think there's bipartisan agreement that we need to do on. So I just want to lay that out there because we need to reopen the government, but the 2 things, reopening the government and making sure people can afford their health care this coming year at a time when everything else in their life that they absolutely need to pay for, from rent, mortgage, health care, energy, child care, is too expensive. This is a time to address that affordability issue, and we can do it in a way that is a win for the American people while we reopen the government. I did have a question, and I'm sorry I wasn't here when you introduced yourself. Is it Verstegen?
It's Shauna Verstegen, yes.
Verstegen, okay. So Ms. Verstegen, in your testimony, you mentioned your family's experience with Huntington's disease. Some of your fellow witnesses have testified that people simply don't need health insurance coverage. Can you talk about the uncertainty that your family faced before you had insurance options provided by the Affordable Care Act?
Yeah, absolutely. It was a very scary thing for myself and everybody in the Huntington's disease community. One of the decisions we all took in before we decided to test to find out if we had the gene that carried Huntington's was, would we be able to get insurance? And a lot of people decided not to test for the disease because of that fear. Yeah. Luckily, again, because I had the confidence in having the Affordable Care Act, I was able to test, and I did test negative. I did want to point out, and she's not here anymore, but I do wonder, those farm families, I feel like I have a very similar story. Right. And I'm just wondering how it's going to help them to not let them have the expanded premium tax credit for next year as well. We all do need that for our affordable care.
Thank you so much. Thanks, Mr. Chair.
So, point of clarity, I don't believe any of the other three witnesses ever implied, much less said, that people don't need insurance. That never happened. The other point of clarification, because I think it's lost, is the subsidies don't go away. Obamacare subsidies remain in place. The way Obamacare was originally designed, up to 400% of poverty level. At most, people would pay 8.5% of their income on their net cost, correct? Is that correct? So let's understand that. What's going away are the temporary COVID subsidies that Democrats scheduled to expire. It was a little help during COVID, and so it's just going to go right back to Obamacare. If you're complaining about that, again, you're complaining about the faulty design of Obamacare that has driven health care to unaffordable levels. Senator Blumenthal.
And Mr. Chair, I will add that regardless of how we got here, this is where we are. A 60-year-old couple in New Hampshire earning $85,000 a year is going to see an increase in their premiums without the enhanced premium tax credit of $15,000 more a year. I don't know how they make that, and they will end up either bankrupt because of their health condition or just foregoing care, which drives up costs for all of us. I'm sorry to not be able to stay longer. I have to go back to a meeting, but I appreciate this hearing very much.
The first step in solving any problem is admitting you have one. That means acknowledging the damage done by Obamacare. I'm happy to work with you to repair that damage. But if you're not willing to acknowledge it, and all you want to do is throw hundreds of billions of dollars to mask the failure of Obamacare, that's what we're not signing up for. Senator Blumenthal.
Thank you. You know, I'm struck by your story, Shauna, and the choices that you have to make. You're facing $2,400 more per year in health insurance costs, correct? And when do you have to make this decision about what to do?
Well, we're still holding on to a little bit of optimism that everybody can come back to work and come together and help us.
Extend the tax
Yes.
care.
And that truly is the difference between that and my husband putting in his application to Costco in a few weeks.
So the decision has to be made right now. You can't make
Yes, we have just over a month.
You can't make it at some point in the future when Republicans get around to providing a health care plan of their own.
And we realize there is a lot to fix, and I truly hope,
lot to fix
I truly hope you can all work together to do that, but we're talking about our premiums going up in just a short amount of time. And I know that these problems aren't going to get solved then. So please help us so that we can afford our premiums in 2026.
And the affordability question is here and now, at your kitchen table, in real time. When you go back to Wisconsin, and you face that decision, it's not, maybe we'll reform the ACA and, to use the chairman's term, dismantle it and replace it with something else, something indeterminate and right now undefined. You have to make these choices right now. That's what Americans are doing, correct?
Yes, and we have that Costco application on our kitchen table.
And the alternative for you, and I'm quoting you, looking at your husband finding another job, considering shopping for a cheaper plan with a higher deductible, or going without insurance at all. I think I know the answer, but why is that scary?
Well, obviously with 2 children, going without insurance, we talked about it, but then we felt extremely guilty and realized that would not be a smart choice for our family. And we did shop, actually, and and as has been discussed by everybody, we weren't able to find anything a whole lot cheaper. So we are where we are right now, and I wish we could cut more out of our lives, but we've already been working on that. And again, it's not just those healthcare costs, it's our groceries, it's our gas, it's everything going up. So I know it's just over $200 a month, but that does make a really big difference for us, and we're hoping that we can save that.
This morning I met with a number of Americans from all around the country facing that same decision. I have transcripts of their remarks, including Aaron Lehman, the president of the Iowa Farmers Union. I'd like them entered into the record if there's no objection. Thank you. I want to come back to something that the chairman said to you before, and I'm quoting him directly, Chairman Johnson, quote, "That is Obamacare's faulty design. It forced individuals like you, individual policies, to bear the full cost of people with pre-existing conditions." prior to Obamacare, we had something called high-risk pool. It worked great, end quote. Now, Shauna, when you explicitly asked what you would be expected to do if you were diagnosed with Huntington's disease, which is a deadly pre-existing condition, or the people like your mom who have it now, the Republican chairman said, and I quote him again, quote, "We would have done high-risk pools," end quote. These are highfalutin, fancy healthcare terms. So in simple terms, what it means is if you are sick, if you're disabled, if you're dying, the Republican plan is for you to pay more in the high-risk pools. You're grouped together with other sick people, and you all get to pay more. That's what they seem to want to do, which is rolling back. It is regressing to a very dark time in the history of healthcare in this country. I know it well because as Attorney General of the state of Connecticut, I went to bat for people who were denied coverage because they had these so-called pre-existing conditions. I don't want to go back to a time when sick people paid double for their health care, or they went without health care insurance and health care entirely. Can you talk about what that would mean for you or your family?
Yeah, absolutely. I actually, before the ACA, I remember having meetings with our state chapter social worker, the Huntington's Disease Society of America social worker, and discussed the pros and cons of testing and how to go about it. And we looked into options if I did have a positive test, and there was not a single affordable option. In fact, I'm not sure if there were any options for me for that. Like I said, luckily, I did not test positive for that. However, it's very important for me to know for the future of my children that no matter what comes their way, they will be able to have health coverage.
Now, the Trump administration is actually taking some action on health care. It has taken some unfortunate action, which is to increase the potential deductibles. It has issued new rules to increase deductibles. How would that kind of rule affect you? In other words, letting insurers charge higher deductibles as a solution to, quote, improper enrollments. What would it mean for your family if your deductible were to double next year?
That would be a big no, thank you. That is would absolutely not help. We do have things come up. We are a healthy family. We have sports injuries and things like that. So having a high deductible does not help the situation at all.
My time has expired.
Okay, some more points of clarification. The ranking member has a tendency of quoting me out of context. I don't appreciate it. I believe when I used the term dismantled, I talked about the way Obamacare dismantled the individual markets and caused, through its faulty design, premiums to skyrocket. When I talked about high-risk pools, I'm sure I always add they weren't perfect. They would have some modifications to make sure that people with pre-existing conditions were covered. Every state high-risk pool were different. Some worked better. I'm saying Wisconsin, the way it was set up and what it did, it worked beautifully. It worked beautifully. Take a look at the successful models. I think they had a great model in Maine, correct? But anyway, that's Senator Scott.
Thank you, Chairman. So, Ms. Ferguson, what did you pay in 2019? What did you pay a month for your health care?
Just keep asking these numbers. Let's see, 2019. What did we pay? I believe, oh boy. 2019, I believe was will you help me? You've got the numbers. I believe that was our, before we dropped to a lower tier plan, $1,000 a month, yes. That was a.
What did you pay in 25?
This past year, $460 a month.
So why should it go down? Did your income go down?
What's that? We selected a lower tier plan. And then we also have the extended premium tax credit that's helping us too.
Okay, and so if the Biden COVID era, what would it go to? If those were extended, what would it go to?
So what would it, well, I don't know exactly what that would add on, but currently this year we have about $800 in assistance from the extended premium tax credit. So I assume it would help us at least another $200-300 next year.
You don't make less than 400% of poverty, right? Your family doesn't?
No.
Okay. All right, Dr. Blaze. So Senator Haston said that in New Hampshire, I guess, that a family of two, if they, if we don't extend this, a family of two, it just skyrocketed, the premium. So what actually would happen if it was a family of two in New Hampshire? Do you have any idea? Aren't they within 400% of the of poverty, and so there's almost no change?
So the underlying Obamacare subsidies, which the chairman said are permanent and aren't going away next year, they are very large. They limit the amount of premium that people have to pay for a plan. So as premiums have skyrocketed over time, the enrollee share has basically remained the same. The vast majority of enrollees are lower income, and they will continue to receive large subsidies next year. So the vast majority of the premium for the vast majority of enrollees will be paid by the federal taxpayer. Most enrollees will pay less than $80 a month for coverage that costs, up to $1,000 a month for single coverage because of the design of the credits. The subsidies in Obamacare only went up to 4 times the poverty line. The idea was that coverage, when they were trying to limit the cost, but those people didn't need subsidies at that level. The problem with Obamacare is it has so increased the price of coverage over time, particularly for older couples, that it has led to very high premiums for them. So they do face higher premiums above 400% of the poverty line if the subsidies expire. But it's a very small percentage of the overall Obamacare enrollees that have that income.
But if you're in New Hampshire, you're making $85,000, you're probably within 400% of poverty, aren't you?
For a couple of two, you're probably just above four times the poverty line.
Okay, so your number's not going to change.
If you're under 400, you will still get a large subsidy. But it's the people just above 400 that are going to face the largest.
Who did the Democrats design it that way?
That was one of the main features of the 2010 law, yes.
Okay. All right, why would they do that? This is their design. They were supposed to, and I assume they were generous and covered the people they thought they had to cover.
In 2010, in 2009, President Obama said he would not sign legislation that increased the deficit by a dime. Now, once the law was signed,
supposed to save like $100 billion?
There were several financing gimmicks. There was a student loan takeover, which has clearly cost money. But what Congress has done is repeal the health insurance tax, the Cadillac tax, the medical device tax, the Independent Payment Advisory Board. Most of the cost savers in the law have been repealed, which leaves just a giant spending
So what's the deal?
provision.
They reduced the cost of Obamacare, didn't they? They wouldn't have reduced the revenue without reducing the cost, would they?
So Obamacare is now significantly contributing to federal deficits, and these COVID-era credits, the Medicaid expansion, because of the bad incentives with states when they're spending and getting $9 in federal money for every dollar of state funding. Like Obamacare is significantly contributing to federal deficits and debt.
So, Mr. Biden, can you walk us through the fiscal impact of erroneous or fraudulent Medicaid enrollment that stems from Obamacare's relaxed verification standards? I'll just give you some numbers when I was governor. So when I walked in as governor, January 2011, we had a horrible economy. So over 8 years I worked on, we added 1.7 million jobs. We took the number of people on unemployment from over 900,000 to 61,000 by getting people a job. We reduced the number of people on welfare from over 250,000 to 71,000 by helping people get a job. And I don't know if you know the numbers, but as part of this no verification, this crappy verification, what's happened? I know I think in Florida it doubled, Medicaid population doubled in that time frame, which, can you talk about the fraud in Medicaid?
Sure, there's two different ways that fraud happens in Medicaid on the enrollee side. You have somebody who's enrolled who's not eligible, and there's a bunch of mechanisms where somebody who's not eligible can be enrolled in Medicaid for a period of time before they're then disenrolled. But you also had, during the Obama administration, you took away states' ability to verify income and eligibility more regularly.
Why would they do that? I mean, that doesn't seem to make much sense. That actually would allow fraud.
It would, because
That
you
was
have,
intentional?
it was, they changed the
It
rules.
was intentional, they wanted more fraud?
Well, there's a lot of incentive for it because a lot of individuals make more money
Why
when they
would-
remain on the
If
program
it wasn't
longer.
to increase the fraud, why would they have done it?
I wonder the same thing.
So can you talk about provider tax, how that is, has cost the federal government massive amounts of money and basically allowed our states to just completely take advantage of the federal budget and federal taxpayer?
So the provider tax is probably one of the craziest money laundering schemes sanctioned by the federal government for states, where states can tax Medicaid managed care plans or they can tax Medicaid providers. Those providers pay the tax to the state, and then the state increases the payments to Medicaid managed care or to providers and draw down federal money.
Do they get the money back?
They do, and sometimes they get back even more than they collect, both on the provider side and the state side, particularly in Medicaid expansion states, because you have that $9 in federal money for every $1 in state money. So you have these incredibly perverse incentives to launder money from either Medicaid providers or now local governments to send that money to the state for the state to draw down additional federal money and then to use the difference for whatever programs they want and call it general fund money.
Thank you, Mr. Chairman.
Thank you. Okay, more clarification here. We've been hearing premiums double, premiums triple. First of all, do any of you know of any gross premiums that are doubling or tripling? Again, I put up the national average going about 26%. So what we're talking about is we're talking about net premiums, correct? Put this chart back up. I want to just show you this, Senator Scott. And again, trying to use Ms. Verstegen's example here just to illustrate. I'm not saying this is exact, but in terms of the numbers you've given us are this year you're paying $460 net, correct? And you got an $800 subsidy. That means your gross premium was $1,026 or $1,260. Okay, so you can see what the annual amounts in that would be. The other thing you've been telling us is you're going to pay about $700 this year if the enhanced premiums go away or enhanced subsidies go away. So again, we looked at a bronze plan. And what's so difficult about this is the premium rates are all over the board for different ages, and so it's just hard. So you can only take a look at one example. But I think this is, and I'm really asking our witnesses, does this look right to you then? So if that's what she paid last year, and she's going to pay $700 this year, that means her premium, if it was going to go up 26%, it may not because Wisconsin's actually less, but somewhere in the $1,500 range, she'd be getting a subsidy of about $888, so more than she got last year, correct? And on an annualized basis, last year she got almost $10,000. This year she get more than $10,000. So what's going up is her net premium. And I'll keep arguing the reason your net premium is going up is because the gross premium is going up by a grotesque amount because of all the things we're talking about. There's no incentive for lowering costs. All the incentive is for insurance companies to keep raising their premium, and they get away with it because the federal government's their customer. The federal government, and the federal government's got Democrats that are just happy to throw hundreds of billions of dollars at the problem to mask the faulty design of Obamacare. That's what's going on here. So again, both Senator Scott and I, we are more than happy to work with Democrats to repair the damage of Obamacare, move to a system that will actually provide incentives. And that's generally through consumerism, through free market competition. All that's been driven out of health care. I mean, one of the things we talked about with Mr. White was the reliance on a third-party payer system. Again, we went from many, many decades ago where patients paid for 80% to now we pay for about 10%. So nobody knows what anything costs, and nobody cares, other than everybody cares about their insurance cost. But you know when you don't care about the gross premium costs? Because when the federal government is subsidizing you to the tune of about $10,000 a year. You don't care about that. You don't care that it's $19,000. You just care about what you're paying. And I understand that, and families are struggling. But let's at least be honest in terms of what's happening here. I've got an article just came out today. Again, this is the media putting pressure. You know, extend these things because there's a couple. Apparently, I'm not sure this person actually exists. 60-year-old couple making around $85,000 in Barron County could see premiums skyrocket over 800% with an annual increase of $33,000 in costs. And I went, that's just not possible. I mean, but it is. That's what the premium is for a 60-year-old couple, $33,000. Now, it's going up that much because they obviously make more than 400% of the poverty line. And this is a couple, I don't know, we'll assume one of the reasons they thought they could retire, because they're retired. They don't get it through the employer. So these enhanced subsidies incentivize people to retire early, knowing they weren't going to have to pay much for health care. They weren't looking at the way the Democrats designed those enhanced premiums to expire, and they weren't going to be able to afford the unaffordable Obamacare. But just speak to that incentive, because we've heard this time and time again, and I think it was Dr. Blaze or Taryn talk about it's a kind of small group of people that aren't eligible yet for Medicare, who retired early, relying on those enhanced subsidies, and when they go away, because they make more than 400% of poverty level. Again, Obamacare was designed not to provide any subsidy to anybody making more than 400% of the poverty level, which is, I don't have that number. What is that for family? It's like $123 a year, isn't it? For an individual, it's like 60-some?
Yeah, 123,000.
So if you're making more than $120,000 under original Obamacare, you didn't get any subsidy under the enhanced subsidies, sky was the limit, basically.
Yeah,
right?
I mean, there was a news article a couple of weeks ago about an early retiree couple. They'd worked in government for 30 years. They had a $140,000 pension, and they, because of the COVID credits, qualify for a $15,000 subsidy now towards their health insurance. There's no asset test on these subsidies, right? You can have unlimited wealth and qualify these subsidies. It's based on income. Enormous incentive for, particularly if the enhanced subsidies are continued, for couples to retire early. We're also seeing big incentive for cities and states to dump their retiree health plans into the exchanges. So the Wall Street Journal had a piece discussing how Detroit and Chicago had offloaded the cost because it was underfunded retiree health plans onto the federal government through the exchanges.
I think they called them the Blue City Subsidy.
Bailout.
Well,
and I'd say so the market in 2013, the individual market was unsubsidized. In the pre-COVID credit era, the market was 75% subsidized. Now it is approaching a 90% subsidized market. There are alternatives. So when I moved to the state of Florida 5 years ago, I looked at Obamacare plans. Obamacare plans, when I called the doctors asking about the plans, they just equated them with Medicaid because they have such bad networks. I then looked at short-term limited duration insurance, which is a plan that the Trump administration had opened up for 3 years, much more flexible, covers a far broader set of providers. I was able to get my family on a short-term limited duration plan with basically a comparable deductible, much broader provider network for 1/3 the cost of what the Obamacare plan would be. So the point is we need more competition, we need more options. Unfortunately, the Biden administration has restricted that ability to access it. So people don't have options other than this one market where the government is dumping all the subsidies into it.
again, I bought healthcare for my business for 30 years. And every year you'd have to negotiate. You'd have a number of carriers coming in. I mentioned that one year somebody came in and offered us zero deductible plans. Like, great. I mean, at the same price we were paying, I think back then we probably had $150 deductible, out-of-pocket maximum for a family, $1,000. Again, I don't remember the exact, but I mean, that's the levels we were at. When I left, I really do not believe I ever had, for one of our health plans more than an out-of-pocket maximum of $5,000 for a family. I could be wrong, but that's about where it was. Then I hear Ms. Verstegen here with a $14,000 deductible. Again, those were the catastrophic plans that didn't cost like anything because it's not insurance. So again, I am more than happy to work with anybody who's willing to acknowledge this reality. Again, you cannot solve a problem unless you first admit you have the problem, then you have to properly diagnose it. You got to do root cause analysis. This is what's driving insurance premiums up. You don't mask it. Again, when you've got a crumbling structure, you got rusty beams, you don't paint over it and then move in. You replace the beams. I mean, there's something structurally wrong here. And there's something really structurally wrong with Obamacare. So it's not like we don't have hearts here. I feel a great deal of sympathy for all of the victims of Obamacare, and there are a lot of them. Okay? I'm happy to provide some kind of bridge for people that, again, had no options. You have no options because of Obamacare. So it's going to take us a while to transition to a system that works. I'm happy to do that, but I'm not going to do it with folks on the other side that, again, take your comments out of context, just absolutely refuse to admit that the structure of their Obamacare is flawed, faulty, causing all this. Now, if they're willing to look at reality, do it like a business person, go, okay, yeah, we kind of blew that. Let's clean up this mess. Happy to do it. Happy to do it once they vote for a clean CR and open up the government and not hold government employees and the American population hostage. They've taken their own family member hostage. This is the most bizarre thing in the world. They're the party of big government, and they've got the gun to the big government's head. And this is the most bizarre Kafkaesque type of situation we're in right now. But again, I'm happy to reopen the government and then sit down in good faith because I feel sorry for the Verstegens. I feel sorry for I feel sorry for these people. I would like to help them. But throwing $500 billion at the problem won't help them. It will not fix the structure. We'll have to be throwing more money next year and then more money. Doesn't fix the problem. Admit you've got the problem. Admit you blew it. And work in good faith to fix it. Senator Blumenthal.
Thanks, Mr. Chairman. Those millions of people who've been harmed by Obamacare, I don't see any of them here. I don't know of anyone who has been harmed by Obamacare. The title of this hearing is the damage that's been caused by Obamacare. We don't have any damage to any individual who has Obamacare or the ACA, except for the people who are going to be paying higher premiums right now. And to bring it back to the real world, Shauna, you are going to be paying more for health insurance next year, correct?
Absolutely.
$2,400 more because the tax credits, the health care subsidies, are going to be blocked by Republicans, correct?
Correct. And it was said that I am limited in my options now or don't have any options with the Affordable Care Act. I didn't have options before the Affordable Care Act, and now our family does have a lot of options. And people keep saying there's nothing they can do, but there is. If we have those extended premium tax credits, that will help. I'm not saying that's the only thing that can be done, and I'm sure you can all work this out. But in just over a month from now, that's what our family needs.
That's the real world right now for you, and it's the real world for a family in Connecticut earning $66,000 a year, which is 205% of the poverty level, and their premiums will increase by $3,000 per year. In Ohio, a family of four making $72,000 per year will see their rates rise by more than $3,500 annually. That's akin to giving the parents in those families a massive pay cut. And correct me if I'm wrong, that increase in premiums will come on top of rising costs for groceries, for housing, for electricity, correct?
Yes, all of our costs are going up. Yeah, housing, electricity, sporting
It's-
events.
It's not just a healthcare crisis, it is an affordability crisis that will be aggravated significantly if these healthcare tax credits are not extended. You know, I want to ask you, again, coming back to your personal situation, how did you happen to become an advocate for affordable healthcare?
I remember how helpful these extended premium tax credits were. Before they were there, we were having lots of discussions again on what to do. And I remember when the administration turned over, the first thing we said was, oh, I really hope we don't lose these tax credits. And when we learned that we might, I had a lot of friends discussing over what's going on, why is the government shutting down? And I did a social media post. I said, here I am. Here's somebody who uses the Affordable Care Act. Here's why my family needs it. Here's why my family needs these extended premium tax credits. And again, I think it's through telling stories. I don't think everybody, I think everyone has a vision of who is using/abusing the Affordable Care Act, but it's us, it's me.
And in your own family, your two children and your husband, I assume, share your passion for outdoors and sports and so forth. And sometimes things happen, broken bones and stuff like that, correct?
Yes,
And that's part of the reason why you can't take the risk
absolutely not.
of not having health insurance.
We don't want to have to make those decisions.
Mr. Chairman, one of the witnesses, I think it was Mr. Blaze, mentioned the Paragon report, which I think it has been established relies on double counting, partial year enrollments, healthy young people who happen to go a full year without going to the doctor or falsely conclude that real people are engaging in fraud. I have a number of analyses of these reports, and without objection would like to submit them for the record. There are 3 articles that describe these and other reasons why the Paragon report conclusions are wrong, as well as a recent federal district court opinion that described the Paragon research as, quote, data of questionable validity. They are a KFF article, Kaiser Family Foundation article, an AHA response, Keep Americans Covered response, and City of Columbus court decision.
Objection, you'll of course have a chance to respond to that.
I'm sorry, were they entered into the record?
Without objection, I just
Thank
said Mr. Blaze have a chance to respond to that.
Well, I don't mind him responding.
No, I mean, I'm in terms of bringing things to the record.
Okay.
So I think we did multiple reports this year and last year looking at improper and phantom enrollment, zero claim enrollment in the exchanges. One report last summer called The Great Obamacare Enrollment Fraud, and then a follow-up. It was very simple analysis. We just compared the number of enrollees who signed up claiming an income in a category that qualified them for a fully subsidized plan with the number of people from the Census Bureau that have income in that category that don't have other sources of coverage like Medicaid or Medicare. And it is a stunning number of people enrolled in that category who don't have that income level. And that's the report that we found in 15 states. There's more than twice as many ineligible enrollees. And the criticisms of that report are really they're laughable. They say that we can't bring data from one year to the next, but that is done routinely because Census Bureau data wasn't available for the same year, so we just needed to make slight adjustments to go from 2024 to 2025. The second set of reports you're referring to is our analysis of zero claim enrollees. In August, so if you have a lot of improper enrollees, we then expect, well, many of these might not be using any medical claims, and CMS in August released data of the number of enrollees who signed up at any point in time during the year that used no medical services. And in 2021, it was less than 4 million people enrolled in the Obamacare exchanges that used no medical services. In 2024, that had increased to almost 12 million people. So that's publicly available data. Your staff, they could run those numbers. And one of the issues was we couldn't identify, and this is from the data, whether people were enrolled for the full year or for the partial year. We presented that finding. That's the same limitation that was in prior years. But if you look at the total market, it was 35% of all enrollees that used zero medical claims in 2024. It was 40% in this fully subsidized category. And in the normal insurance market, you would expect that to be about 15% of enrollees that didn't use any medical claim. But all of the data is publicly available, and we clearly stand by the research.
Okay, I think I have a couple of minutes left on my round.
Go ahead.
Thanks for that explanation. I just want to reiterate that reforms are easily within reach. I hope that my colleagues will join me in the measures that I've proposed to eliminate abuses in the Medicare Advantage area, more power for negotiating drug prices in the Medicare program, and one other, which I think is very important, giving patients the power to walk away from their private insurer and join Medicare. If we don't want to line insurers' pockets, I'm hopeful that my Republican colleagues will join me in legislation that would give patients that power, and to oppose the administration's steps that only serve to increase the cost of health care, which in fact would allow insurers to charge families more and increase their already too high deductibles. I think I'm pretty much out of time on this round.
Okay. Kind of hard to fix something when you're in a constant state of denial, almost total state. I mean, the ranking member apparently just does not want to acknowledge the fact that you have prosecutors prosecuting people for these phantom policies. So it exists. It's difficult to come up with a definitive number because you have to make estimates off of trends, that type of thing. But 6.4 million sounds like a reasonable number to me when you've gone from, what, 4 million to 12 million people that have made no claims against their policy. But he also stated that there are nobody harmed by Obamacare. There's no victims. There's an excellent article in the Wall Street Journal talking about written by a father with a 17-year-old severely autistic child who, God bless his family, they're taking care of him at home. They were just hoping for home health care. They were on a 10-year waiting list because they were being crowded out by those single-age medical expansion beneficiaries of Medicaid. That's a 17-year-old, that's a family being harmed by Obamacare. What about all the employees that have been thrown off of employer-sponsored care because the employers are incentivized? So, I got an alternative for my employees, boom! You can take advantage of the wonderful Obamacare exchanges, which Ms. Verstegen took advantage of. Again, she's a victim here. In 2019, she was paying $1,000 a month. $1,000, to me, when I was buying, that's an absurd level, $1,000 a month. Okay, she couldn't afford it, so she had to go to a Obamacare policy that she could afford at $250 a month with a $14,000 deductible, and she and her husband had to take out an $18,000 home equity line of credit. Again, I feel sorry for you. You are a victim of Obamacare. There are a lot of victims of Obamacare, okay? There's been a lot of damage done. I think we've done a pretty good job laying the case out. Now, you can deny it, and we'll never fix the problem. You can keep throwing money at it, and you create more victims as we completely bankrupt this nation, spending money we don't have. We can actually sit down in good faith, like a business person would do, and go, yeah, this isn't working so good. Okay, what are the problems? What do we need to fix? What caused premiums on average, state by state? 169% increase over 2013 versus 39% inflation. What caused that? I think we know. Won't get it perfect, but I think we know. So again, I'm happy to work in good faith, but I mean, until we get people on the other side of the aisle that are willing to admit what a miserable failure Obamacare is and what the structural reforms need to be, again, I'm not going to sign up with throwing hundreds of billions of dollars more to just paint over the rusty structure. So if you want to respond, go ahead.
Yeah, thank you, Mr. Chairman. I'm hardly in denial as a former prosecutor about the presence of wrongdoing and fraud that may exist in this program or any other government program. I have prosecuted cases of fraud as a United States attorney, and I have sued pharmaceutical drug companies as Attorney General for violating the antitrust laws in many of their practices. And if the chairman is really serious, please join me, and Republicans, please join us in the Insurance Fraud Accountability Act to impose criminal penalties on the brokers who engage in deceptive marketing or enrollment practices that may lead to the abuses he has just described. I know as a prosecutor, laws are dead letter if they're not enforced. And dismantling Obamacare is not going to cure the problems of human greed that lead to abuses of any government program. So I hope he and Republicans will join me in that effort and the other reforms, which could be done during this session, before we do another great, big, beautiful, blatant betrayal, and before people lose Medicaid, and before we have the increase in premiums that real-life Americans are going to see in real time, even as they see also the increases in rent and electricity and food that make life increasingly unaffordable for them. And I am sure this debate will continue, and I hope to make the most important point of all, which Shauna really made so well. This is not a Republican or Democratic problem. It should be bipartisan. Healthcare should not be about red or blue states or political affiliations. And I hope we can move forward and come together as a nation to improve Obamacare, but not throw it out. That's the last thing in the world we need. Throwing out the Affordable Care Act is not what Americans want. It's not what they deserve. It's not what we should even raise the specter of having happen in the greatest country in the history of the world. Thanks.
Well, vote to open up the government. We sit down and talk. Not going to get very far if the only solution is throwing hundreds of billions of dollars at it, or some other Rube Goldberg types of solutions that won't work. But appreciate the witnesses. Again, thank you for all your time and effort. The record for this hearing will remain open for 15 days, 5 p.m. on Friday, November 21st, 2025, for the submission of statements and questions for the record. This hearing is adjourned.